In this video, I'm going to talk about return. So when you have to deal with return, would the shareholders be happy? Would the owners be happy? The first indicator is ROCE, which is your return on shareholders equity. Okay, and then the second one, you can use DPS, which is your dividends per share. You can use EPS, which is your earnings per share. Okay, sometimes you can also use your NAV, but here I want to talk more about your share. Okay, the other ones I'll deal with them as we come to different question papers. So I want to talk about ROCE, which is your return on shareholders equity. Now, what happens here is that your return must always be, you need to compare this with alternative investments. And normally in grade 10 to 12, your alternative investment that you normally deal with is the fixed deposit. So you want to deal with alternative. What does it mean? It means in order for you to say your return is a good return or a bad return, you need to look at the interest that is obtained, interest percentage that you obtain on your alternative investment, which is a fixed deposit. So if, let's say, my ROCE is 10%, and interest on investments is 9%, it means my return is actually good because it's higher than alternative investments. But let's say my return is 10 and then my interest on fixed deposit is 15%, then we have a problem. Because if the business had invested its money in alternative investments, that's in a fixed deposit, it would have obtained more than what they are obtaining from running that particular business. But I'm also going to explain that in greater detail when I deal with question papers. For now, I'm gonna leave it at that.